Welcome to Drill Down Earnings. We have second quarter results from Intel. They're not good. This is the business story behind one stock on a move. I'm Cory Johnson, Chief Market Strategist for the Futurum Group. Intel, of course, we care about so much, so important in the manufacture of semiconductors, someday in the future maybe. Certainly the making of chips for PCs and so many other devices, and in the data center, of course. Wall Street just looks at a beat or a miss, and this was a miss, but let's talk about the actual numbers, because the numbers beyond the revenues, the $12.8 billion in revenues and the 1% annual decline. Look, the big numbers here was they're going to cut $10 billion out of costs. They're going to stop paying a dividend to shareholders, which takes away a whole class of shareholders who want to get out of a stock when that's the case. And they're going to cut 15% of their massive workforce. So let's take this apart a little bit. And again, as I mentioned, $12.8 billion in revenues. That's down 1% from last year, but after worse declines in previous years, maybe that's not the worst part. Their loss per share, disconcerting for this company. But really, when we look forward to what's going on with this business, by suspending the dividend, they're telling us they need cash. And indeed, the CEO talking about the performance being disappointing, even as they're hitting the technology milestones they want to, they're not selling as much stuff as they want to, and they're not selling it as profitably as they want to. And you can see it across the board. Their R&D spending is up 33% on a year-over-year basis, but those kind of, as a percentage of sales, it's 33%, kind of hanging in there, but they're not able to put the pedal to the metal on that to try to catch up to maybe say NVIDIA. They can't do that right now because they just don't have the cash to dump into that kind of research, even though they're spending so very much. Again, a third of all revenues put into R&D. Their gross margins have held at 35%, but this was a business that was once shooting for 50% gross margins. Now the foundry business that they've been really struggling with launching is taking its time, and it really matters. Even in this quarter, it was 21% of revenues, but they and the losses there are really hurting them. The rest of their businesses are making money, but they're dumping so much money. They lost $1.7 billion in the foundry business in the last 13 weeks. That's how bad the quarter was for foundry. They need that cash. They're going to save cash by not paying out a dividend and cutting jobs. But in the short term, there's going to be a lot of pain. The market recognized that. Stock was down 18% after this press release hit the tape. And that's on top of the 18% it declined already this year. So, I'm not good at math, 36% or so. It's not quite 36%. But look, massive declines in the stock today, massive declines in the stock over the course of the last year. Pat Gelsinger, the CEO, wants to talk about all of the good things they're doing in terms of innovation and building for a different future. But right now he's facing all these financial machinations to keep the company going, to protect the company. But they're also in a worse place because some expenses are really high. Wafers, for example, are all really expensive for them, not least of which because they're writing off old stuff. That means the new stuff is the highest price stuff, and those expensive wafers right now are making margins even worse in the near term, certainly hurting the company and the stock, and yes, their cash burn rate. Let's listen to what Pat Gelsinger had to say at the company.
The wafers are expensive right now. And so, we get this kind of early ramp of the product at a much higher wafer cost that we're pushing through the system. And that puts pressure on the margins. That's going to carry into next quarter. We will do better in next quarter, obviously, but we're going to do more volume and the margins will be, below the corporate average because while we're improving the wafer cost, it's still not to the point where it's above corporate average yet. And so it will weigh down on margins for the third quarter as well. After that, it gets more and more mature, the cost structure gets better, and the situation on Meteor Lake will improve meaningfully.
So trying to keep hopes alive, Pat Gelsinger doing that. They're certainly doing some great things on the product side, but the near-term financial pain for this company is serious. All right, I've got one number that means a whole lot. The most important thing I want you to remember about this Intel quarter, the drill down earnings bite right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So second quarter results from Intel. Here's the summary, the things that you really want to remember about this quarter. $12.8 billion in revenues, and the guidance was for the next quarter being about the same, worse than what Wall Street had anticipated. But the real big news here, they're cutting $10 billion in costs. They're getting rid of their dividend, which is certainly hurting the stock price a lot. And revenue growth down 1% on a year-over-year basis. But the big number to remember is 17,475. You're not going to find that in the press release, but that's how many jobs they're cutting. They talk about percentages of cuts. They're not making people 15% shorter. No, they're cutting the workforce by 15%, and it's certainly painful for those 17,475 people or more who are about to lose their job at Intel. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson, Drill Down Earnings, part of 6.5 Media. And you can check me out on X at Cory TV, at Drill Down Pod, on Instagram and TikTok, and all of our earnings reports and a whole lot more, including lots of news about Intel, at 6.5 Media on YouTube. Leave some comments, tell us what you like, dislike if you must, subscribe. Again, reach out to us, we'll be listening.